Hello and welcome to My Finance Teacher. We're talking about gold, we're talking about the US dollar, we're talking about the interest rates and Jackson Hole speech from the chairman of the Fed. So, starting with gold, gold has been in a very long intermediate cycle. This intermediate cycle that started in the middle of December last year has been the longest one in the last over 15 years, if I'm not mistaken. And I think we've seen the final low on the 16th of August this year, and we are probably entering an advancing phase of a new intermediate cycle. Look at the RSI that we saw near the middle of August. That's something like 20.6 on the 14-day RSI. That's pretty oversold, which just indicates that a bounce up in the price is very likely. Another indication of a possible bounce in price is this COT report on gold. That's Commitment of Traders report. Over here, if we compare these two numbers for large speculators, these speculators are now net short on gold, and speculators are usually considered to be dumb money, whereas commercials are usually considered to be the smart money in different kind of trades. And the last time the speculators were net short, that was also more than 10 years ago for sure. If I'm not mistaken, that was in early 2000s, and after that we've seen a pretty nice bull run in gold price. So that also is another indication of a potential rally coming up in gold pretty soon. Besides the RSI, besides the oversold RSI, besides the duration of this intermediate cycle, besides the COT report on gold, some other indicators that point to a potential rally coming up in gold are as follows. Let's have a look at what's happening to the US dollar. US dollar has been in sort of a trading range for several months since middle of June, between 94 and 95.5, and in the middle of August we saw a breakout of that trading range. US dollar went up all the way close to 97 on the DXY, and it's currently back within the trading range. So we saw a fake breakout. A fake breakout to the upside is very often where the tops occur. So there is a chance that the intermediate cycle in the US dollar has topped. That happened on the 15th of August, and we might enter a declining phase over the next couple of months. And if dollar breaks down, probably if it moves down to, let's say, 200-day moving average, that's actually quite possible. That would be 200-day moving average is close to about 50% retracement, which is a common retracement. That would actually help gold to rally, as I said, within its new advancing phase of a new intermediate cycle. So this is what I expect on the US dollar. I expect US dollar going down into end of October, early part of November. After that, we see tax loss selling. A lot of assets are being sold. Possibly money is going to be moved into the US dollars, and we might see an advancing phase in the US dollar at that period of time. Nevertheless, over the next couple of months, I expect gold to move up to at least I would say 1310, because that level has actually been a very strong support and resistance zone for quite a while. So it only makes sense that this formidable support and resistance zone plays a role again, and we might see this advancing phase bring the gold price back to that level, 1310 or so. However, it's not going to be a straight upward move. In the end of September, we expect a Fed rate hike. The market predicts a Fed rate hike with quite a high degree of certainty, 98.4% over here on the futures for that Fed rate hike. So I expect a bounce up in gold over the next couple of weeks, and sometime from middle of September into the end of September I expect a decline in gold price as we are moving into the expectation of a rate hike. That actually agrees with what often happens on the charts in terms of technical indicators. This line here, this green line, is the intermediate cycle downtrend line. Within the advancing phase, we break through that line and we often retest the breakouts. So we might retest the breakout by the time of the Fed rate hike. Once the Fed rate hike is out of the way, sell the rumor, buy the news effect is going to push the gold prices higher. So that would give us the first daily cycle between the middle of August and end of September, about a month and a half. That would be a usual duration for a daily cycle. And the second daily cycle in gold might take us to 1310 or so. So that is what probably is going to happen over the next couple of months. And over the next couple of hours, an interesting event is, of course, Jackson Hole meeting coming up, and it's going to be interesting what Powell is going to tell us. As we see, the market still expects a Fed rate hike by the end of September, but there are some articles, for example, here on CNBC, that Powell might be unexpectedly dovish. This article here presents a couple of reasons here, including the trade war, the weakness in emerging markets. We know what's happening in Argentina, in Venezuela and Turkey, as well as the danger of the yield curve inverting if the short-term rates go higher. And of course, an inverted yield curve is pretty bad for the economy. So if over the next couple of hours Powell is unexpectedly dovish at the Jackson Hole meeting, that can just help gold to completely shoot upwards. And if you would like that to happen, if you would like to see gold at least at 1310 or higher over the next couple of months, hit the like under the video, subscribe for more analysis like this, and make sure you have a nice weekend. Thanks for your attention.